Joining me now is the BBC's business editor, Simon Jack, and Laura Davison, political editor from Bloomberg News. Laura, Simon, thank you very much indeed for being with us. Obviously, we're seeing the turmoil on the markets continue today, Monday. Simon, just in terms of understanding the basics here, can you explain to us how a stock market index works?
OK, so if we were to take our own stock market index, the biggest one, which is the FTSE 100, 100 biggest companies publicly listed in the UK, they were all put in a big bucket back in 1984 and given a certain weighting in that bucket, depending on how big those companies were. And it was set at a level of 1,000 back in 1984. Now, since then, companies come, companies have gone. There's been takeovers and mergers, but generally speaking, there's been 100 of the biggest companies. And basically, the stock market is a reflection of their sort of total value over time. The bigger the company, the more weight it has in the index, same in the US. So you'll see, for example, an AstraZeneca or an HSBC has more weight than others. And in the US, you've seen the S&P 500, which is the 500 biggest companies. You've seen enormous concentration in some names like Apple, Nvidia, etc., Amazon, what have you. And so what the stock market tells you is generally the direction of travel of most of the shares and the value of the shares in those companies with a concentration on those biggest names. And a lot of people say one of the problems with the US stock market in recent years is that those few big tech companies have had an overweening influence on the whole thing. But generally speaking, it's an indication of what some of our biggest companies are worth, and whether they get up or down tells you something about the sentiment of whether you think that their profits are going to rise or fall in the future.
Thank you. And Laura, obviously we're seeing the falls continue today. And when we talk about a correction, can you explain what that means in practice? How much are companies, political leaders waiting to see whether there's a negotiated deal? Because everyone's, I guess, wondering where the bottom is, where the level might lie at, and whether the market will recover.
Yeah, so that is really the unknown question right now. About $5 trillion has been zapped from markets. And, markets overseas are down, and we are waiting for markets in the U.S. to open here in just about an hour and a half. We'll get a sense of where things are headed. What we can expect is more volatility. There's a meeting today, later today, with Netanyahu at the White House with President Trump, and there's a question of, will there be some sort of relief from tariffs that will be announced there? The U.S. and Israel are very close allies, so a close watching there. We got a little bit of a sense of kind of how markets are reacting on Friday when Trump said he had spoken with the Vietnamese, and they had that the U.S. officials had spoken with Vietnamese officials, and there was some potentially a deal in the works for Vietnam, which has been hit with this 46% tariff by the U.S., which is quite a significant level. That they would reduce to zero all of their tariffs on U.S. goods going into that country. We saw as a reaction, stocks like Nike and Lululemon actually increase on that news because these are apparel makers that have a very big presence there. So each, broadly, I believe we're going to see markets down, but you could see particular stocks, particular things moving in a more positive direction as there's indications that there may be some exemptions that are allowed. We don't know that Trump will allow that. He sent some mixed signals, at times saying that his policies will never change, but then also suggesting that some deals are possible.
And just before I start looking at some of today's reaction over the weekend, Simon, to relate this to all of us, what happens if the stocks continue to fall for our pension funds or for other aspects of daily life? OK, I think there are two things to stress here. What happens in stock markets is not necessarily the same thing that happens in an economy. They can be linked, but they're not exactly the same. Some people invest directly in shares, and this will definitely affect them. These are some big falls, some of the biggest falls we've seen in a couple of days since pandemic panic gripped the markets back in 2020. The other way that people are exposed to this is through their pension funds. Now, pension fund investing is a long-term game. Not all of your money will go into shares. Some will go into government bonds. And the closer you get to retirement, the more weighting you will have in things like cash and government bonds, so the less this will affect you. There are also two types of
pension, a defined benefit pension, where you get a price promise, a percentage of your salary in retirement, and there's defined contribution, where your pension pot's value will rise and fall with financial markets. So yes, people's pensions are exposed, but I think that this is a long-term game, pension investing. We've seen things like this before a few years ago during the pandemic. I think what's more important, the warning sign flashing here is not about the value of your pension pot. It's what's going to happen to the economies in which we all live and work. And a lot of people saying that the chances of a recession, both in the US, UK, and even globally, have definitely gone up a notch since then. And that has implications for things like jobs and wages.
OK, we'll come back to define a recession in a moment, maybe. But Laura, just let me bring a little bit of the reaction that we've had today, which raises another couple of questions, because economy ministers from across the European Union are meeting in Luxembourg to discuss a response to the US tariffs. Let me just play you a brief clip of the German economics minister, Robert Habeck, responding to a question about how Donald Trump came to those calculations, those original figures for how he is imposing these taxes and tariffs.
The calculations from my point of view are nonsense. Even the basis of the calculation is nonsense. Yes, the assumption that a trade budget surplus or deficit is a problem in itself is a wrong estimation, because in the end globalization serves all economies, and especially the American economy has huge growth figures in GDP, better than a lot of European countries. So you see, if we, the rest of the world, are selling cheaper goods to the American economy, it's of use of the American economy. So even the basis of the calculation, how shall I put it, economical, philosophical basis is nonsense. And then we have seen that the countries who try to ease the conflicts beforehand with the US and hoped for a reduction of tariffs or being excluded from tariffs are wrong. This has not happened. So I can only say to the European partners, we have to stay united. If you try to solve the problem on your own, this will not be successful.
So, Laura, the basis of that original calculation and some of the assumptions politically, even and economically, that lie behind it, what would you say to that clip that we just heard?
Yeah, so what the White House did in determining all of these rates, originally Trump has talked about these as reciprocal tariffs, that the White House is going to add up all of the tariff and trade barriers that certain countries charge on U.S. goods going in, and they would basically hit back with that same level. That's not exactly what they did. That's actually a very complicated calculation to do. Instead, they looked at essentially what the trade deficit is between the U.S. and that country. Trump, for years, literally going back 4 decades, has been very perturbed by the idea of trade deficits. And he wants to see, more manufacturing within the U.S., more goods going abroad, and that there's essentially equal trade between the U.S. and other countries. Of course, it's a very difficult thing to achieve. The U.S. is a very consumer-driven economy. It's a very big economy, and a lot of manufacturing of things that people use, every day, things like clothes, toys, shoes, household wares, are pretty much exclusively made overseas. Not to mention things that can't be grown, like bananas or other products that people eat, coffee. So this is kind of really at the crux of the issue and kind of the economic conundrum that we find ourselves in, is that Trump does not like trade deficits. And that's what we've seen, kind of underlying these tariffs. This has been something he has railed against, ever since well before he was into politics. This is an idea that he's been thinking about for a long time. During his first term, he imposed some tariffs, but they were a lot more narrow in scope and size, and you didn't see quite the market impact that you saw here. Now he is politically less restrained. He, is in his second term. He cannot run for another term, and he has a different set of advisors around him that are much more willing to go along with these policies. We saw a lot of pushback from his first term advisors.
Let me just bring in a little bit of that, because in an interesting turn of events, the American billionaire Bill Ackman, who endorsed President Trump last year, has posted himself saying that the US leader was losing the confidence of business leaders and should pause his trade war. He posted on X saying the president has an opportunity to call a 90-day timeout, and he warns if we launch economic nuclear war on every country in the world, business investment will grind to a halt, consumers will close their wallets and pocketbooks, and we will severely damage our reputation with the rest of the world. Simon, it's interesting, isn't it, to hear some of those who have spoken out in favour of Trump now saying this?
Yeah, and also Bill Ackman was very critical of Howard Lutnick, the economic secretary, saying that Howard Lutnick's firm was heavily invested in government bonds, which actually in a time like this do pretty well because there's a run for safe haven. But I think it's right. I had an interview with the vice chair of Goldman Sachs a few weeks ago, and that was when we were in this on-again, off-again Trump tariffs thing with Mexico and Canada. He said that if you're a chief executive of a major company, you don't know what to do right now. You don't know whether I'm not going to buy a company, I'm not going to open a factory, I don't know where to do this, I don't know where to do that, because there's just so much flux. And that is actually impacting business confidence, so they will invest less, they'll hire fewer people, and that applies to the US as well as others. Now, there are some people around the world, for example in the UK, got the low end of the tariffs, the bare 10% minimum. I've spoken to businesses who say, I've been outcompeted trying to attract business in the US by Chinese and European counterparts. Well, now my tariffs are half what they are in the EU, and they're a fifth of what China is being charged. I'm back in the game. Maybe I can be competitive again. And let's not forget, there's lots of goods that were destined for the US, which may now be redirected to other markets, including the UK, which has said it won't retaliate against the US. So this is incredibly complicated. This is a finely tuned machine, which has been tuned over decades, this kind of world trade thing. And it's a bit like sort of chucking a piano out of a top floor window. No one knows exactly what notes it's making. Yeah. And it's going to take a long time to pick through all the different categories of this. But you're right in saying that everyone's looking for an opportunity for Trump to say, oh gosh, do you know what? The markets have freaked out a bit. Is there any room for negotiation in it? So far, very little evidence of that. And that's why the markets are in such a bad mood.
Because, people thought maybe things might change.
They thought Bark was worse than Bite. And he doesn't really mean this. He's surely not going to sort of levy stuff on. People have said to me, I can't believe I went to the supermarket last night. I can't believe the trade deficit I have for the supermarket, that they should be buying as much from me as I buy from them. So it doesn't really work like that. That's a silly example perhaps, but that's what some countries are saying.
And let me just bring in a post from Donald Trump himself, Laura, to put to you. He has posted in the last hour or so saying oil prices are down, interest rates are down, the slow-moving Fed should cut rates. He says food prices are down, there is no inflation, and the long-time abused USA is bringing in billions of dollars a week from the abusing countries on tariffs that are already taking place. He also talks about China, saying the biggest abuser of them all, China, as he puts it, whose markets are crashing, just raised its tariffs by 34%. There's been a lot of speculation, Laura, as to actually what the ultimate motive of Donald Trump is. Is he trying to bring interest rates down? Is this about targeting China? Is he literally focused on the trade deficits? What do you read into this latest post?
It's sort of an all-of-the-above strategy, and if you ask the people around him, there's certain people who are seizing on different parts of this. Trump has put a lot of pressure on the Federal Reserve, the central bank, to lower interest rates. This is really kind of cut across longstanding policy where presidents are not supposed to put pressure on Federal Reserve chairs on their interest rate making policies. Trump has essentially ignored that, but this is something he's wanted for a long time, and he essentially said that the Federal Reserve is constraining the economy and constraining, therefore, his popularity by keeping rates too high. He also has longstanding grievances with China. And so we see this tit for tat race here. Of course, that first round of tariffs that he did, allegedly about illegal immigration and fentanyl. China had those 20% tariffs. Then they got another 34% here last week. But it's not clear that there's sort of an end game here that's planned out. Some of Trump's advisors want to have a lot of tariff revenue because they want to offset tax cuts. But you kind of can't have all of these things. You can't both, have a negotiation and use the sort of threat of tariffs and then the possibility of lowering them to bring people to the table and also raise revenue. And so this is what really has markets so freaked out, what has economists scratching their heads, and has really sort of caused the chaos that we've seen over the past 5 days or so.
OK, we're going to get more on this in just a moment, but we're going to take a very quick break. Laura, Simon, do stay with us. We've got a lot more questions coming in. If you want to send them in, please do get in touch. This is BBC News.